Welcome back to Bazaar Morning Call. Well, we are bracing for a fantastic start to trade, but there are a lot of stocks that you'll be tracking as well, a lot of numbers to react to. Well, Sonia, you go first. Our team is standing by to run us through the top 10 stocks that we're looking at. Sonia, Eicher Motors, good numbers?
It's good set of numbers. We were talking about the new Meteor, right? Wow. And those 5 pictures there. It's looking pretty good there. But this time around in their numbers, the market share in the 125cc segment has gone up. 125cc plus segment, which they operate in. Now it stands at 30% versus 26% same time last year. So that's the big positive over there. Overall as well, if you look at the numbers, right, no faulting it. I mean, volume growth of almost 60% is what you're seeing for Eicher Motors at 392,000 units. You have the, the revenue growth has been very healthy in this quarter, largely in line with estimates. No surprises either way. 56% growth. Margins have picked up on a year-on-year basis. EBITDA growth has been solid as well. And profit growth, nothing to complain, largely in line with expectations. The only problem is, on a quarter-on-quarter basis, the margins have fallen over 100 basis points. Now, that's because of a higher share of the low-margin Hunter sales. Now, the Hunter has done very well, but it's a lower margin product. So the question is, will they be able to offset this this dilution in margins with the lower raw material costs, So can they offset it? That's the big question that we need to monitor that, and whether a higher scale and lower input prices can offset the margin dilution. But brokerages are quite sanguine. Morgan Stanley says this is a good approach where they are focusing now more on volumes than on margins. So I'm going with green on the stock.
Okay, green on Eicher Motors. Then we'll wait by for that launch Meteor here in India. But let's hop across to Ekta. Ekta, how was Apollo Hospitals numbers?
Well, actually not a bad set of numbers because the revenue was up 14%. The street was anticipating a 6% growth this time. The margins came in at 13% versus 16.5% year on year, but it was in line with estimates of around 13.5% and profit over 200 odd crores. So that was not too bad either. Now, healthcare services, which is basically the bread and butter hospitals business, revenue was up 5% on a year on year basis. It was up 12% on a Q on Q basis. EBIT margins also improved. But what probably got the numbers lower, especially on the margins, was the digital health and pharmacy space, where there was an EBIT loss, which was higher on a Q-on-Q basis. Retail and diagnostics, which is basically Apollo Health and Lifestyle, the revenue was up around 9% and margins improved around 200 basis points on a Q-on-Q basis as well. So overall, looking good for Apollo on the top line front, but maybe it is a little bit of a concern with regards to what's going to take place on the digital health and the pharmacy space. Call is at 2 p.m. this afternoon.
Okay, we'll await more details on that, but let's go across to Mangalam now. He's going to talk about our favorite subject, travel. Indian hotels on his radar, and also food, of course. The other favorite, Zomato, is what he's looking at. Mangalam, over to you.
Travel and food, both doing well. For the Indian hotels, it's a seasonally weak quarter, but in that as well, the streak of good performance continues for the company. Importantly, we've seen, growth above pre-pandemic levels as well. Quarter on quarter, there has been a decline, but that's primarily on account of seasonality. A 69% jump in the revenues, 300% plus jump in the EBITDAs, and the company has reported a profit as against a loss same time last year, and lower finance costs has also aided their business. Importantly, occupancy at 70% is higher than pre-pandemic levels, and also revenue per available room is 134% of pre-pandemic levels itself. The stock close to a record high, but importantly, the third quarter is likely to be the best quarter in the history of the company, and its inclusion in MSCI will further aid the stock. For Zomato, the best part about the numbers for me this time around was the quality of disclosures, and operational metrics have improved even as the pace of growth comes off. And that's because the company said that they are strategically choosing to trade low-quality growth for better unit economics, and they've reiterated that their adjusted EBITDA loss will actually break even in the next 2 to 4 quarters. Adjusted revenue for the company has grown 16.5% quarter-on-quarter. Even if you strip Blinkit consolidation up, it's about 9%. But importantly, the food delivery business has broken even on a quarterly basis. It had broken even earlier as well, but they did a technical adjustment and improved their disclosures, and even on those disclosures, the food business has broken even. The company believes this will sustain.
All right, this is interesting. New age businesses, new age companies. I mean, the guidance is changing to a bit of a positive now. Sonia, Ashok Leyland should be in focus today.
A very good set of numbers coming in from Ashok Leyland. So I'm going with green on that stock as well. if you look at it, it's a beat on all parameters for Ashok Leyland. Revenue growth is 85%. Of course, there was a low base of last year, but even as per the poll, it's much higher. EBITDA has come in at 536 crores. The poll was 480 crores. The margins have picked up to about 6.4%. And if we can get a trend on the screen, kind of a bar chart, you'll realize that after languishing in about 4% for many quarters, Q4 was a bit of an aberration, but it was 3-4% for many quarters. Now it's back to 6.4%, and that's something that the street will like. And the market share as well has improved to about 32% as of Q2. So I'm going with a bright green over there.
Okay, all right, Sonia, bringing us some good news this morning. So we'll keep an eye out on both those two stocks. But Mangalam, coming back to you, Bata and Trent, you're not too impressed?
Well, for Bata, the problem is that raw material costs continue to haunt the company, and that's what we saw across the footwear space as well. Bata's revenues were marginally better than expectations, 830 odd crores versus the street expectations of just around 790 crores. But the EBITDA, there was a miss of almost 40 crores versus street expectations. And when you miss that, the net profit also is a 40 crore miss, as a result of which it's coming at 55 crores versus a 90 crore poll. Gross margins have improved for them. The company said that they saw tough operating environment. In the mass categories, there's been sluggishness, but what's doing well for them are sneakers, because they continue to lead momentum for the company and they have higher margins as well. For Trent as well, the revenues grew about 66%, but the EBITDA margins, they compressed almost 500 basis points, as a result of which the net profit was just about flat. Why is it that the margins declined by 470 basis points? 200 basis points gross margin compression, 200 basis points higher rent expenses, and 90 basis points higher employee costs. So, the focus on Trent will now be the third quarter as against the second quarter.
Okay, all right. Mangalam, thanks for that. Well, I'm focusing on JSPL, and the numbers looked a little bit disappointing. You're looking at the absolute EBITDA number, you'll see it was a beat, but you need to adjust it because there was a forex element out there. And adjusted EBITDA was a miss. They had a forex gain of close to around 400 crores out, so you need to take that out of the way. And the standalone EBITDA per ton is what we look at. That came in at around 7,100 rupees per ton. That's the much lower than most on the street actually we're working with. We had an expectation of close to around 9,000 rupees odd. The positive though is that they've reduced net debt by close to around 700 crores, which is good news. But operational performance lacking a little bit. So expect the stock to start in the red, and then we know metals are firing. So we'll take it from there. Well, Abhishek joins us to tell us about Muthoot Finance. Abhishek, how are those numbers?
Well, Nigel, a few months back I had mentioned in my friend's tweet that gold financing NBFCs are losing customers to banks, and over the last 2 quarters we are seeing that playing out. So Muthoot Finance is losing customers to bank. The AUM growth is one of the lowest that you are seeing in the last 20 quarters in terms of YOY. So YOY growth is at just 3.8%. In that, the gold AUM has grown by just 3.3% YOY and about 0.6% sequentially. However, the gold customer base, that is down nearly 3.85% on a YOY basis. Net interest margin has improved by 30-40 basis points given the fact that cost of funds have reduced for them. Subsidiary performance are weak. Housing finance is under pressure for 7th quarter in a row. They'll continue to lose customers both YOY and quarter-on-quarter, which is leading to decline in AUM both YOY and quarter-on-quarter. The Bellstar MFI that they have for a 3rd quarter in a row, it's seeing increase in the gross NP ratio, which is now at 8.5% versus 7.3% in the previous quarter. So in terms of our poll, both the NI and PAT has come in below our poll. We have CLS's note on Muthoot Finance. They have an underperformance rating with the target price of 1200. However, for FY23 to 25, they have cut the EPS estimate anywhere between 7 to 8%. So expect a weak opening for Muthoot Finance in trade today. Back to you.
Okay, thanks a lot for that. Weak opening for Muthoot Finance. But you heard from Mangalam earlier about how people are traveling more and eating more food. But are they painting their homes a lot more? Let's find out. Mangalam, you're tracking Berger Paints?
I am tracking Berger Paints, and this time around they've done well as well in terms of revenue. 20% jump in the revenue, but that hasn't, like all the other paint companies, reflected into their EBITDA. Despite a 20% growth in revenue, the EBITDA has grown just about 3% and that's on account of lower gross margins. The net profit as a result of which has been flat. What's heartening, however, is just like all other paint companies as well, they expect margins to improve in the second half because we've seen, some sort of cooling off in inflation for raw material, and they've increased their market share by about 80 basis points, and they've announced capex as well. My sense is that Nigel keeps talking about how cement companies are increasing their capacity because of one large player coming in, and that's what paint companies are doing as well. They have a UP facility which is coming on stream, and they have 30 acres of land that they've acquired in West Bengal for another 175 crore capex plan.
Okay, all right. Mangalam, thanks for that. And we'll hear from the management later on in the next 1 hour or so. But for the time being, let's do a quick recap then of all the stocks we just covered. Stocks with positive news flow: Eicher Motors, Apollo Hospitals, Zomato, Indian Hotels, Ashok Leyland, and Berger Paints. While stocks with negative news flow include Bata, Trent, JSPL, and Muthoot Finance.
Okay, so that's about all the stocks to watch, but there was so much action that happened overnight in the commodity market. Manisha Gupta is joining in. Manisha, yesterday you were tracking cryptos. What is it today?
Oh, I'm looking at gold and silver today, Sonia, because what a strong run-up overnight with the U.S. inflation growing at a slower pace, the U.S. dollar index declining by 2%, the U.S. 10-year Treasury yield slipping to a one-month lows as well, clearly boosted the enthusiasm here. So you have the gold prices now trading at an 11-week high. We've seen 2.5% of gains here. Silver gained up by 3%, platinum was up 5.5%, and the industrial metals did well too. So you have the copper prices which are now trading at a 19-week highs. Nickel prices gained up by 4% overnight. Zinc was up 2.5%. So metals it is that really took it with both hands. The decline in dollar index doing great too.
All right, Manisha, thank you very much for that. By the way, gold prices have also made a what is basically a double bottom. It should technically head to all the way to about 1800 or so. We'll see. It's flattered to deceive in the past. We'll see if this happens this time. Muthoot numbers were weak. Abhishek was telling us, but maybe the rally in gold perhaps supports it a little bit. We'll take a quick break here. Deepan Mehta, director at Elixir Equities, will be joining us on the other side for some stock-specific talk. Important this morning, Mitesh Thakkar and Shrikant Chauhan will also be joining us to discuss some technical trading ideas. That's also coming up in a bit.